Hey guys, this is Mr. Roxy. I'm coming at you from Palm Beach, Florida. Today it is Saturday. It is March the 13th. And for once, I'm actually kind of taking a day off. So usually I work on weekends as well, though otherwise I hit the road and travel and then I'm working also. But today I am actually at home and I can expand a little bit about the 10b5.1 disposition program that Carl Icahn initiated on Occidental, which was announced yesterday. Of course, I made a quick video saying Carl Icahn sells Oxy, but in my haste to make the video, I've clicked on a link that says view the actual filing, and while I was chatting away, I could see the filing, but you could not. Which means I probably should change my name from Mr. Oxy to Mr. Fossil and learn how to use technology. But so what I'm going to do today is I'm going to give you sort of an expanded version on that. We're going to talk a little bit about the official definition of a 10b5.1 plan. I want to show you the actual filing in case you haven't seen it yet. But I also want to talk a little bit about a concentrated position, which is something Carl Icahn alluded to in his filing. So bear with me for a second here, and I'll see if I can actually share the screen and make it work. So let's see where I am right now. So I'm over here, and I'm going to go over here, and you should now be able to see the Occidental website. So couple of people have asked. One of them was Alexei from Moscow, said, how do I get updates to these filings? Well, I added a link in the comments. So if you want to get updates from Occidental as to the SEC filings, then you can subscribe and get the news firsthand from Occidental instead of getting it second or third hand from one of the TV clowns or talking heads on some media site that is not giving you good information. So I hope you can see the screen. I think what I'll do is I'll first test drive the video before I post it. But here you can see there's all the 10Q filings, but I want to see everything. So I'm going to say show all. And here is the latest filing, which is actually the one I want to click on and that I clicked on yesterday. And I really thought you could see this, but obviously you could not. So maybe it's because I opened it as a PDF instead of a HTML. At least I know those words, Mr. Fossil. So let's go with HTML, which is just a web page. So here we go. This is the actual filing that I wanted to show you and that I read from yesterday. So if you were wondering how I can so eloquently speak about Carl Icahn's filing, it's because I was reading off the screen. Because as you know by now, if I try to ad-lib, I just mumble and fumble my way through whatever. This says, therefore, on March the 12th, 2021, which was yesterday, the reporting persons, which is Icahn, entered into a trading plan pursuant to a Rule 10b5.1, the Act trading plan. I'm going to talk more about that one in a minute. So I explained the concept of a 10b5.1 plan to you guys yesterday, and also shared that this is not that complicated. It's actually relatively simple. I used the example saying that if you're an insider of an organization, so let's say, for instance, you own a few million shares of a company that you founded. So you're the CEO of the company. You own a few million shares. The shares are currently trading at $10 a share. If you just went on the open market and suddenly dumped a couple of million shares at $10 each, the market will get jittery because other investors will be saying like, oh, wait a minute, the CEO has just sold a whole lot of shares. He or she obviously knows something that I don't. So in order to avoid that, what the CEO does is says, I'm going to, for example, sell 1 million shares at $10, and I'm going to sell 250,000 shares at the end of every quarter. So in other words, for the next 4 quarters on a predetermined date, so let's say at the end of the quarter, so I'm going to start on March 31, I'm going to sell 250,000 shares at $10. Then I'm going to wait 1 quarter. In other words, the calendar will just click by April, May, and June. And on the 30th of June, I'm going to sell another 250,000 shares at $10. Now, this would be much better than just dumping 1 million shares in the open market. And you can now say, because you've announced the fact that you have a disposition plan in place, which is called the 10b5.1 program, you can say, I need this money because I am going to diversify my assets. I want to buy myself another beach house. I need a private airplane or whatever the case might be, but you actually have the ability to include a message, which is sort of like a motherhood message. So let's take a look at this one. This says the trading plan is intended to comply with Rule 10b5.1 under the Act. Under the trading plan, the broker is authorized and directed to sell up to 30 million shares in the open market on behalf of the reporting person, who is Icahn, subject to the satisfaction of certain conditions, including, among others, a minimum trading price. So I'm not sure what that minimum trading price is. This is the entire filing, so we might learn what that is later. But let's say, for example, Carl said, sell up to 30. Remember, it's up to 30 million shares at a certain price. So that might be not less than $30. It might be for $35, whatever. And then they add, there can be no certainty that any shares will be sold under the trading plan. Because, for example, if he says sell up to 30 million shares at $30, and on Monday, Occidental, because of this announcement, opens at like 10% down, so now it's suddenly trading at $27. Obviously, there are not going to be any shares sold. And then if you have a situation like under this 10b5.1, where you have the ability to make that statement that I referred to as a sort of a motherhood statement, because you can add some news. And this says the reporting persons, Icahn, will still beneficially own over 77.9 million. So that's like 78 million shares with a market value in excess of 2.1 billion at the current trading price, and would remain one of Occidental's largest shareholders. Occidental has about 930, 940 million shares outstanding, common stock shares outstanding. So when Carl Icahn hits 78 million, he falls below 10% in terms of ownership, but he's still a material shareholder in the corporation. And then he continues to say, we continue to support Occidental, and we continue to have confidence in Occidental's future prospects. We also intend to remain on the board. Remember, he scored 3 board seats when he was disrupting Occidental in their status quo, and let's just be happy and sing Kumbaya. And it's one of the reasons why I like Carl Icahn, because he does disruptions in organizations, and at the same time, he does that mostly to the benefit of Icahn, but to the benefit of common stockholders like you and me. This trading plan is scheduled to terminate on May 1, 2021. So now you have a little window here that you see, which today is March 13th, so we're in mid-March, and May 1 is just sort of 6 weeks away from today. So the plan terminates on May 1 unless it's terminated earlier in accordance with the terms of the 10b5.1. He has the ability to terminate that anytime he wants at any given time. The reporting person may exercise subsequent influence over how, when, and whether to effect any sales under the trading plan, although they are permitted to terminate the trading plan at any time. Any sales that they do under the trading plan will be disclosed as required by applicable law in public filings with the SEC. So we'll know after the fact when they publish their Schedule 13D, as and when that happens. So let me give you a sort of a more formal definition of the 10b5.1. I've given you a couple of explanations. I'm just going to go through this very quickly. Investopedia says, what is Rule 10b5.1? It was established by the Securities and Exchange Commission in 2000. So yesterday when I made the video, I said a few years ago, hey, I cannot believe 20 years has flown by since they instituted Rule 10b5.1. That's very commonly used by insiders to avoid. Down here, it actually tells you this. Rule 10b5.1 permits major shareholders to sell predetermined numbers of shares at predetermined time or dates. Many corporate executives use 10b5.1 plans to avoid accusations of insider trading. Obviously, if I tell you I'm going to sell X number of shares, for instance, in December of 2021, it's very tough for you to accuse me of insider trading when I announced it 9 months in advance. Rule 10b5.1 was established by the Securities and Exchange Commission in 2000. Issuers of publicly traded corporations set up a trading plan for selling stocks they own for their insiders. Insiders are people with material knowledge. They are usually executive members of the publicly traded corporation's management team, or otherwise they are institutional investors like Carl Icahn. It is a clarification of Rule 10b5.1, which is sometimes written as Rule 10b5, created under the Securities and Exchange Control Act of 1934, which is the primary vehicle for investigation of securities fraud. Okay, so it's one of those plans that kind of keep people out of jail. And then I wanted to talk very, very briefly about a concentrated position. So, I mentioned this in the video, and I said that when an investor, in this case, Carl Icahn, gets to a point where he suddenly has a concentrated position in one particular equity, because the equity's value has just exploded in the open market, right? So you may own 10, 20, or even 1,000 different stocks. But if you get like a 10x or 20x on one of them, you're going to end up in a concentrated position. How do you get out of it, right? So for a guy like Carl Icahn, he's basically saying, I'm going to publish this public 10b5.1 program, which is an executive disposition program, and I'm going to sell up to 30 million shares at a certain price before May the 1st of 2021. That's one way to do it. But what about for you and me? So here's an article. This is just from a company called Elvest. I don't know them. I just found it online. I thought it's a nice little simple way to view it. It says the most straightforward way is to sell some of the stock that you concentrated in. So guys, think of it like this. Let's say, for instance, you bought 5 equities and you invested, $10,000 in each of those 5 equities, and they may be just sort of 5 equities in your energy portfolio. So let's use me as an example. So I own 5 blue chip equities in the energy sector, and they are Occidental, Total, Energy Transfer, Pembina, and Enbridge. Of those 5, all of them are doing well, obviously, because energy has kind of rebounded. So in other words, my equity portfolio is doing well. So let's say, for example, I put $10,000 into each of those 5 equities, and all of them are now trading at sort of, $12,000, $15,000 each. So they're up 20%, 15%, or whatever. And now I have Occidental, and I was lucky enough to buy Occidental at like $10, and now it's trading at $30, right? So my Occidental position was also $10,000 when I opened the position, but now it's worth $30,000. But the other 4, using my example, are like $12,000, $15,000. So what do? Right, the most straightforward way is to sell some of the stock that you concentrated in. So I'm now going to say, like, okay, I want to rebalance this a little bit. So I'm going to sell a little bit of Oxy, and maybe I'll buy some of the other 4. Or maybe I'll buy something completely different, right? So I'm going to take a little bit of cash off the table. We might do this over the course of multiple years, and you'll want to do this in the most tax efficient way. You may have losses in other positions that you could sell. So let's say, for instance, I have something else. So right now, I don't really have something that's in a significant loss situation, which is a fortunate position for me to be in. But let's say, for instance, I had invested in GameStop at $500 a share, and now it's trading at $50, right? I may sell some of my GameStop, which gives me a realized loss, and then I'll sell some of my Occidental, which gives me a realized gain, which is a taxable gain. One offsets the other. So I fix my concentrated position by selling something that is a loss situation, by selling my, some of my Occidental, which is in a profit situation. Or you can work with your financial advisor to create a tax budget. Watch out for financial advisors. Most of the time they make money, even if you don't. But anyway, some of them are good. And you may say to your financial advisor, I'm willing to realize about $100,000 in gains each year, or this year, or whatever the case might be, which would be a taxable gain. Another strategy, which is something I do as well, because as you might know by now, my family and I have a charitable organization, which is called Memory Trees Corporation, which is a registered tax-exempt organization under IRS Code 501c3, which means it's a tax-exempt public charity. Another strategy, if you don't need the cash, is to create a donor-advised fund. So in this instance, what you do is you actually donate your Occidental shares to, for example, my charity organization called Memory Trees Corporation, and this goes into a donor advised fund. This lets you donate the stock. You get an immediate same year tax benefit. So in other words, whatever the value is. So I'm going to donate, 100 shares of Occidental, which is trading at $30. So that's a $3,000 tax benefit. Now, obviously, whether you can deduct this from your taxable income or not is not something I'm advising you on, because I'm not a tax advisor and I'm not a financial advisor. But what you get now is a donation receipt. If it's $3,000, it's probably going to fall below your annual minimum for tax purposes anyway. But if you itemize your tax deductions, then it could be meaningful. And then you can make grants to charitable organizations from that donor advised fund over time. If you guys want more information on that, that's a completely separate topic again, and I'm not going to go into that one right now. But basically what I wanted to do is I wanted to give you some clarity on the Rule 10b5.1, because I talked about it yesterday, on the reasons why Carl Icahn might be exiting some of his position. And by the way, this is a small portion of his position, because if he sells 30 million shares, he's still going to have 78 million shares. And of course, he owns a fistful of Occidental warrants as well. But I wanted to talk to you about that as well. And then the sort of assumption that we can make as it relates to Carl Icahn's trade here, or proposed trade, if it happens, is that he announced this 10b5.1 disposition in order to correct his concentrated position in Occidental. These guys play with big money. And if Carl can take $1 billion off the table and rebalance his portfolio, that's probably not a bad thing to do. So on that note, if you need to figure out how to take your $1 billion off the table, where to put it and how to do it, we've covered a couple of things now. So insiders implementing a Rule 10b5.1 disposition trading plan, a concentrated position, and we talked a little bit about Carl Icahn's trade. So on that note, guys, have a great weekend. This is Mr. Fossil signing off. I hope the video works. I'll check and then I'll post it. I'll talk to you soon. Bye-bye.